Ascending triangles are technical patterns. They show up on charts, indicating the potential for another leg higher on an existing rally. Right now, we're seeing the stock market break out, and it's in large part due to this ascending triangle pattern that has emerged technically over the past couple of weeks. Like its namesake, it's part of the triangle family, but it has a flat top and a steep rising angle underneath. The cool thing about ascending triangles is they're great for bullish trade setups. I don't like them from a shorting standpoint if they break to the downside, but from a bullish standpoint, I do like to get long on them, and they provide two separate layers of support underneath your trade setup. So let's take a look at them right here. It doesn't necessarily stand out, but you do have this little flat area on the chart that we can draw. Now, the ascending triangle started actually back in late May, and you can see where it connects right here, and then we got the breakout on July 3rd. Now, this is maybe a little bit different than your typical ascending triangle pattern because of the depth of the triangle. It didn't start all the way back in the very beginning of where the lows were established to start forming this triangle, and that's typical. But what you tend to do is take the high point of the triangle and subtract the low point of the triangle. In this case, you have 550 minus 518, that's about $32. So you project $32 of upside as a result. So in this case, you would get about 582 on the S&P 500. In fact, there was people today that were already projecting that the year-end target for S&P was 5,800. Whether that actually gets to that point or even beyond or falls far short remains to be seen. But right now you have a triangle pattern that would suggest exactly that. Now, the cool thing about these triangle patterns, what I like to do is use the bottom part, this rising trend line that helps form the triangle, as my method of managing the risk, especially in the early going. I like to put my stop loss somewhere below a key price level that also encompasses this rising trend line. So right here, I'd probably be putting it below the lows from July 1st. That would be below 542. It breaks out at 550. So in order to get a 2-to-1 return, you would need a move that takes it up to about 566. Very doable. Now, a lot of people will look at the volume here and say, hey, man, it's breaking out, but you're not seeing above average volume. And that's kind of typical, but you also have to look at it for the seasonality factors as well. We're in the middle of the summer here where your volume is much, much lower than it usually is. So in the middle of July, I don't have high expectations for volume. So if it's coming in just below or at average, that's good enough for me. On the flip side, you take a look at the Qs, you also have an ascending triangle pattern, and it's breaking out of that one as well. So let's go ahead and dissect this pattern. You have the flat top of the ascending triangle, and then right here, this is a little bit less flat of an angle, but it still forms an ascending triangle. So right here, slightly different, but still an ascending triangle. And the reason why it's so much more different is because of how this angle is so much flatter versus SPY, which was much, much more steeper. So for me on this one, the ideal entry would be around 488, and then the stop loss, I would probably put it below the lows from 624, which would be around 473. That gives it a lot more of a buffer. Now, the cool thing about these, whether you're looking at the SPY or the Qs, is that, it, like I said before, it has two levels of support. So it breaks out. If it pulls back to this level of support, it still has this level of support right here underneath it as well. So if it breaks below, it could technically bounce off of this rising trend line. So you have two support areas that I really like to use when it comes to these trades. And so if we get a good, healthy breakout, I'll also use this rising trend line continuously as the stock or the ETF continues to mature in price and goes higher. But I'm also not going to be surprised either when I see the pullback to this breakout level and then a bounce, because most of your breakouts, there's going to be a retest of that breakout level at some point. And so right here, we're about 3 days into it. Very easily could come back down to this breakout support level and then start to bounce once again. And if it does that, I'm fine with that. That's not a big deal. But if it breaks below it, you also have this rising trend line to offer up support. It starts to break below that. Like we said, we have this final stop loss here at around 542 that would take us out of the trade, because you also have this third layer of support underneath. So this purple line here offers a third level of support. So this is the kind of stuff that you want to look for in your trade setups. You want as many layers of support underneath because it gives it the stock the most opportunity to succeed, because perhaps if the stock doesn't break out the way you expect it to, if it comes back down, hopefully one of those levels of support will be able to attract buyers into propping it back up again. Now, the one thing that you want to make sure that you don't do, and I've seen a lot of people do this, and that is try to make an ascending triangle pattern out of something that's not there. So you take, for instance, PANW. P-A-N-W. I'm going to go back one day here, so I'm not going to take this particular triangle that you just saw there and put it into the equation. But when you look at it just like this. When you don't take today's price action, you look at it and it's like, okay, I think there might be an ascending triangle there. And in fact, when I was looking at this chart before, I was like, maybe there is one. You know, I was considering it, but then I went ahead and passed on it because I just felt like it was too much of a stretch. So this ascending triangle pattern, essentially what gives it a little bit of that ascending triangle look is the shortening of the lower candle shadows underneath it. You can see here, you got a really long candle shadow, a slightly less longer, and an even slightly less longer shadow here. And so it gives it that triangle effect. But if you really look at price action, it's been doing nothing but just trading sideways during that entire period of time. So I don't necessarily look at it as a triangle pattern. Now, what sometimes you'll see people do is they'll try to make the flat part of the triangle a little bit too tight. They're ignoring some of these candle shadows. But when you do that, you risk the chance of a false breakout. And when you get these false breakouts, you can get into the stock and then rapidly see the stock go against you. And in this case, if you take into account the most recent trade action, then all of a sudden you have a break to the downside. Now, would you short it on a break to the downside? Absolutely not, because I don't think ascending triangles work as well from a short perspective, because you have a rising trend line that it just broke through, but you don't have any falling resistance to support the stock and its drop lower. So I don't like it from that standpoint. In this case, you had the false breakout and then it completely broke down. You have to be careful about how you're trying to use these stocks and how you're trying to create the ascending triangle. In this case, I don't think this is the kind of ascending triangle pattern that you want to look for. The one in SPY that I pointed out, much of a better one that I would aim to trade off of. So wrapping it up, we have an ascending triangle pattern that has come about in both the SPY and the QQQ. They're breaking out. Don't be surprised if you see a pullback to that breakout level and then for a potential bounce. But if it doesn't, it also has that rising trend line that I pointed out right underneath it here. If you enjoyed this video, I would encourage you to like and subscribe and tell me down in the box below, what is your plan with the market right now? Are you aggressively adding long positions here, or are you starting to get a little bit nervous and saying, you know what, I think this rally is going to start coming to an end. I'm going to book some profits aggressively here. Let me know down in the comments below. Thank you guys, and God bless.